Hello, everyone, and welcome to another inspiring episode of Lift Talk. Today, we embark on a profound conversation centered around funding and empowering health tech around the world and make quality healthcare accessible for all. So, before we begin, I would like to acknowledge the traditional owners of the land on which we gather and pay my respect to their elders, past and present and emerging. I'm Irene Tsang, founder and CEO of Lift Women Group, dedicated to fostering a supportive ecosystem for female entrepreneurs. If you are a woman with vision seeking resources or mentorship or funding, we are here to elevate your journey and support you. So let's dive into today's conversation. So joining us today is Scarlett Chen, the managing partner at Verge HealthTech Fund, the first global early stage VC fund dedicated solely to health tech. She is committed to funding and nurturing founders worldwide who aim to revolutionize healthcare with technology, making quality healthcare accessible to all. So before Verge, she was the managing director at Prudential Corporations Asia, spearhead strategic investment across health tech, insurtech, and fintech sectors, and invested in some pioneering startup in the health tech space. Moreover, Scarlett has held the influential advisory role in an area of startups and funds. Her extensive experience includes leading global financial institutions investment at unpack Capital and managing over 30 billion US dollar in transactions during her time at Merrill Lynch in the US and Barclays in Hong Kong, where her efforts garnered multiple accolades. Welcome, Scarlett. So we are truly, truly honored to have you with us today. Thanks so much for your time.
Thank you for having me, Irene. I appreciate it.
Right, so let's get it all started. So my first question is, I would love to have you take us back to your journey is like transitioning from corporate into managing a global fund. That's a very interesting change. So could you walk us through your journey, like where you started and how you have arrived in the current role?
Sure. Um, so the biggest difference that I would say, before, I guess between the corporate me and the present me is that now I'm old and stubborn and I choose to do what I like to do and pursue my passion. So this is really the single biggest difference. And when I went to the U.S. when I was 15 years old, I was doing everything that I could to support myself. I was sent there by my parents by myself. So I was washing dishes. I was a bus girl. I was a waitress. I was wrapping takeouts. I did college in 3 years, not because I was an overachiever, but just because, look, tuition is very expensive. It's as simple as that. And getting into investment banking was great, but it was also partially because I needed sponsorship of my visa. I needed to get my green card. Some people say, wow, how do you stick around for, over a decade in banking? Well, when you need to process your green card, you gotta stick around. It's pretty simple, right? So I would say that before it was really more about doing whatever that's needed to support myself. And now when I say I'm old and stubborn, I am older than you think. I've had more than 2 decades of working experience, and for me, it's about doing something that I truly enjoy now. So which is the current role at Verge. And when I was at Prudential, something that was quite interesting that happened in my mindset was that I got to meet all these amazing founders when I talked to them about their companies, and they showed me presentations where they say we're here to change lives, we're here to save lives, and they're so passionate. They're so passionate. And in 2019, at my first JP Morgan conference in San Francisco, I said, this is absolutely amazing. I've been meeting with founders from Monday morning to Friday evening. And on the plane, coming back to Hong Kong, I said, the best thing that I can do as an investor at this stage is to invest into these founders and also help them grow. And that was it. That was the mission that I set out to do. So I became a health tech founder exclusively, a health tech investor exclusively, and I also left Prudential to pursue what I do now at Verge, which is dedicating myself full time to this. And before it was kind of like it was good, it was nice, it was a nice, stable corporate job, and making money for other people. But now I just want to do what I like to do. So that's what I mean by being old and stubborn.
I think a lot of us would love you being old and stubborn because then you help us, empowering so many health tech. I think in your career, you must have witnessed many successes and failures in the startup world. So, what are some of the biggest or most common challenge that you see founders facing, and what advice can you offer to them to how to navigate and overcome these challenges?
Yeah, it's really, really difficult to be a founder. This is like one of the hardest things ever. Um, it's sort of like you're jumping off a cliff, but you don't have your parachute working yet. You're still building the parachute as you,
So true.
after you jump off, literally, right? So that's actually how it feels like to be a founder. And you might also say, oh, you're an investor. Can you actually relate to that? Yeah, absolutely. As a fund, we are also a startup, right? So many people don't realize that investors also need to do the same, as in we also need to raise funding, right? If we don't raise funding, we will have nothing to invest, right? If we don't build a track record, people don't give us money, right? If we don't have a strategy that works, again, like we don't get support. So, and also if we don't build up a solid foundation, an infrastructure of how we, support the business, it doesn't work, right? We will just be a one-trick pony. We won't be a long, sustainable franchise, which is what we strive to be. So lots of commonalities, I think, even between the real startups and also startup funds like ours, even though we've been around since 2018 and we funded 52. The partners team has funded 52 health tech companies from 21 different countries, impacting more than 62 million lives. So lots of challenges which are common. So I think number one for all startups, fundraising, unless you are bootstrapping. But look, we love founders who bootstrap, but you can only go so far with your own capital. And then the second thing is really how do you build a business? So how do you build a business from a 2 people team, for example, to a 10 people team? And then later on, even a bigger business, right? What needs to happen every step of the way? And then the third challenge that I often see is the specialist knowledge that you need about that field. Some founders are very, very specialized already before they come in because that's how they spot the opportunity, right? But some founders are less so. Some founders actually come in from other fields and then they learn about it and they say, this is interesting and I'm here to disrupt. I'm here to, change the field. But people often underestimate how much common knowledge you also need about building a company. So for example, within health tech, you need to know about healthcare. You need to know about the TMT space, so the technology space. You need to understand the consumer space, right? You need to really understand the business models. So reimbursement models, for example, in the US, and in general, just how do you distribute products and how do you get paid? Who pays for your products? So there's a lot of knowledge that's actually outside of your domain specialty. And that knowledge is really important. And it's difficult to actually have one person. It's almost never, you never have one person who has the entire spectrum of knowledge, or even one team, right, at the very early stage. So, all these are so fundraising and actually building a business going from 0 to 1, and then having that specialist knowledge and the broader knowledge base. I think all these are some of the common challenges.
And then do you have like specific tips around how to navigate, like for example, fundraising, or for example, how to build a team or how to scale your team? And lastly is, so how do you gain those knowledge if you don't really have that?
Yeah, so this is definitely a longer conversation then. I think that it's very difficult to do all these things. Yeah. And you got to expect that these to learn these, it takes time. It takes a lot of time. And you experiment and you try and you try again and you try again. But I would say that without giving a specific playbook, I think it's really important to talk to your peers and talk to other people who have done it, right? So, like for example, building a company, how do you know who is the next hire, right? And who should be carrying out certain work? And when resources are really constrained, like how do you dedicate your time? Because as the CEO, you are the chief everything officer. That's really what you are. It's not like you have a team, you know, go get go get this done. You're the one who says, "Hey, well, I think we should go that way," and then you say, "And I will go do it." So,
Oh, I love this.
talking to other startups, not necessarily in the same field, but just talking to others about like how did you set up the team in the beginning, and how did you kind of like navigate, how did you spend time, and really think through, right? Think through. I think about the principle of thinking through before just execution, right? So think about everything that could go right or go wrong, and just think that through. And if it goes right, then this is what happens. If it goes wrong, then what's my plan B, for example, right? And once you think that through, you just push yourself kind of like, after this step, what is the next step, right? So do that thinking beforehand. And then when you're executing, you're actually, one, you feel much more confident. Yeah. And two, you don't panic, because uncertainty is actually what makes people panic, and they feel like, oh, I don't know what to do, right? But this is actually, once you think it through, then you say, look, even if this doesn't go well, like it's okay. We pivot, we try something else, right? So startups pivot all the time. So talk to others, learn from others, talk to lots of people to gain their domain knowledge, because you won't have that. You simply won't. But you got to talk to a ton of people in the beginning and find those people who are willing to help. So, I mean, I would say that this is the common, kind of the commonality that I would say in the strategy, in the playbook for all these different, challenges.
Amazing. I love that. And I absolutely love Chief Everything Officer.
Yes, that's what you are. That's what you are.
Yeah, yeah, I absolutely agree. And I'm just doing it as well. Well,
Yeah.
so tell me, what has been your proudest moment in this journey, or a moment that particularly empowered you?
Now I actually have to go back very, very early on in my journey. I'll tell you one quick story. So I was a computer science major by training in college. And after I graduated from Stanford, I went straight into investment banking, never did a day of coding. But my one transaction that was, something that I was the most proud of was actually rescuing the state of California from going into bankruptcy. So this was a deal that we did back at Merrill Lynch. And it was a deal that was literally, it was like mission impossible, because of the requirements from the state in terms of how do you actually structure the debt, what kind of level savings you need to achieve, and because it's market, because it's a very large deal, so the market rates will determine these kind of like the savings levels and what bonds are actually refunded. So the traditional way of doing this, which is, by a software, by hand, and you choose those in the beginning and you choose what you want to refund. But that doesn't work anymore, because it's going to be that day. and the market rates will determine the whole structure. Yeah. And usually for every deal, it's way smaller and you determine those from the beginning. But in this case, it's get the largest deal possible and get the state out of trouble, right? So we did a $4.1 billion deal. And I was the analyst on that transaction. It was literally the mission impossible. And I came from the computer science background, so I thought about how can I automate this? Right. So I coded everything within Excel. And I essentially I learned the VBA. So this is the programming language within Excel. And literally I went to a bookstore, I picked up this book. It says VBA in 28 days. I said, well, it's more like VBA this weekend. So so I picked that up, I learned it, I coded everything. And then on the pricing day, which is usually very busy because you're doing all these rates and all that, it was actually very simple for me. All I needed to do was so I just entered in, the market rates. I pressed one button, the entire process just went through. So it was all automated, and I didn't even have to check because if you use your own hands, it's very easy to make mistakes. But the computer does it. So I just sitting there going like, yeah, we'll get this done very quickly. And so when everything was done, people were like, how did you come back so quickly? Because they expected hours, to turn things around. I was like, no, 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 just a couple minutes. Here you go. So that was a moment that I was really very proud of. And it's something that I always think back on because many people say like, oh, you gotta, most people, I would say in the world, have a very fixed kind of mindset. They think, this is what I know. This is my educational background. This is what I have done in my career. And therefore, I better stick to it, right? I better do what I know. And I can improve on the basis of that. For me, I've pivoted many times in my own career. And even in my own, in my current job, I bring different elements from other places, right? And I actually think that, for me, going from computer science into finance, going from finance from sell side to buy side, and then going from PE to now BC, and then going from not healthcare at all to now directly into health tech, like every step of the way. Yeah. Oh, and I forgot one more, which was before I started buying banks and insurance companies, I also didn't specialize in this, right? So it was on the ground training. And I said, half a year is what I give to myself to become the expert, right, in the field. And at Unbound Capital, I became the head of, so I was the global head of financial institutions group. My entire team were previously FIG bankers. I was the only person who didn't come from the FIG background, but I said, it's okay, I'll learn it. And I became the team head. So I think it's more about, I think everything's possible. Everything's possible. Well, with the exception of I'm probably not going to win in the Olympics because physical capabilities, I'm a bit constrained. But other than that, I just think that everything is possible, and it's okay to learn new things. It's okay to say I don't know this right now, but I will in the future. So, and you try different things and you push yourself. So I always use that sort of growth mentality instead of a fixed mentality. And I think that especially nowadays in today's world, having a growth mentality is absolutely necessary because we all have, access to the internet. We can all go on Coursera, for example. You don't have to go back to school. You can learn courses. You can just take courses online. You can learn anything that you like. You can ask ChatGPT anything. Yeah. I think there's like we are so empowered now to do anything there is in the world. So yeah, I think that that's the part that I think is the most intriguing from my own career.
Wow, that was so inspiring. And it's literally the next level, saving the state of California from bankrupt. So, wow, you're phenomenal. And I can't agree more. It's all about your mindset and your ability to learn and your ability to pivot that matters. I
Mm,
remember I read a study saying actually by the time our kids grow up and go into the world, 60% of the current jobs might not be existing. Like there will be new things, new jobs, everything is changing. So you just have to learn how to pivot. And I love that you are a learning machine. You it's really, really fascinating. I'm so happy to have you and have that conversation today, honestly.
Thank you.
So back to what you're doing now, Verge HealthTech Fund. So it's helping a lot of startup and it's investing in a lot of very, very promising startup as well. So can you share with us what is the investment thesis of Verge HealthTech Fund and what qualities do you look for in early stage startups?
Yeah, so Verge is a impact fund that focuses on really generating two bottom lines. So the first bottom line is financial returns, and the second bottom line is impact. And we specialize in health tech only, and we go very early in the stages. So we go into pre-seed, seed, and Series A companies. And the thesis that we believe is really how do we use technology to empower all the resources within healthcare? Because we know that we don't have enough healthcare resources, we don't have enough doctors, nurses, hospitals, you name it, especially in emerging markets. And therefore, how do we turn one doctor into two? How do we turn one nurse into three? How do we turn one radiologist into five, right? So those are the kind of things that we think about from using technology. And also, we see that currently healthcare is actually very much sick care. So it's so much focused on diagnosis and treatment, right? You go see a doctor when you don't feel well. And very often that's too late. We believe that healthcare should have a health component and have a care component. So healthcare should be health plus care. And currently the health and the care components are kind of missing. So within health is more about how do you do prevention? How do you do risk detection? How do you do intervention before you actually get sick? And the care part is more about how do you adapt to now the different disease mix in the world. So, 100 years ago, people used to go to the hospitals for things like, I lost my arm, I got into an accident, or infectious diseases. But nowadays, much of the disease burden is actually chronic. It's non-communicable in nature. It's things like diabetes, hypertension, mental illness, Alzheimer's, etc. So it's totally different. And therefore, the way to care for these patients is also different. So it's no longer, let me go see a doctor every 3 months or every 6 months and get my medicine. It's actually about how do I care for my health, on a day-to-day basis. So we very much go into the care part. And also it's about how, given how technology, how advanced everything is in the technical world, how do we use technology? How do we use internet and data analytics and AI to now use all that within healthcare so that we can be much more efficient and effective. And this process will make overall healthcare to be much more accessible, affordable, and also high quality. So that's really what we focus on. Now, in terms of what do we actually look for as investors? I always tell people that there are three buckets that we look for. So number one is the people, right? Early stage VC, it absolutely comes down to the people, and it comes down to whether this team can actually pull it off. So, and you might not have the full team, and you might not have all the capabilities, and that's absolutely okay. Absolutely okay. It's about understanding your passion. It's about understanding your persistence, understanding the founder market fit, right? Whether you are the right type, for this market, understanding the founder product fit, right? Whether you are the right team for this particular product. And so there's a lot of thinking on the people side. And also it's about understanding whether the founder can just weather through the storm, do the right things, pivot. If you're not pivoting, you're probably not doing it right. So constantly pivoting, whether you can pull that through, right, in the future years. The second part is more about the company. So we look at everything from the market, right? What is the total addressable market? Is that market, significant enough? Is there a large enough problem within that market, right? Because we don't want solutions looking for problems. We want to have, real problems and solutions that fit, right, into that market. And then specifically into the company, if it's a deep tech, we usually look for, four different areas. So it's the tech, the tech of the IP, the clinical outcome. We look at the regulatory regime, if it's a regulated product. And then lastly, we look at the business model. So how do you get paid? What is the distribution routes, et cetera. Now, if the company is a platform, then we usually use, different lenses to look at that. So we look for traction of the platform. So a lot of it is actually it will be metrics more from the internet space. So things like engagement, right? What is your MAU, your monthly active users? How long do they, spend on the app? What kind of services or products are you actually delivering? Do you have something that's really differentiated? How's the user experience, et cetera, et cetera. So that's another kind of different way of looking at platforms. But because this is health tech, it shouldn't just be, selling shampoos or something. It has to be pretty clinical as well. And can you actually get into a field that can change the health outcomes of the users? So different ways of looking at the company. And then lastly is more about, the deal. So the actual transaction, because sometimes you can have the right team, you can have the right company, but if they're asking for, $100 million in valuation when you think that they're worth 20, then that's obviously a problem, right? So everything that comes down to valuation, ownership, ticket size, what are the governance, what kind of rights can you get? And this is really kind of after the first two are good, then you go into the actual deal dynamics. And all three have to check the box. And then also additionally, what I want to point out is that as an impact fund, the impact part is actually embedded in the overall process. So there are areas that we don't actually focus on just because the impact is less than some of the other areas. So we already screened those out from the actual process, from the initial screening. And also when we talk to founders, we ask things like, what do you think about going to emerging markets, for example, if they're from the advanced markets? We ask around. We ask a lot of different questions to really understand, right? Is impact something that the founders actually care about? And then also within the business model, we observe, right? What are you actually doing? What is your pricing level, right? Are you just going to stick to, for example, the US, which is the largest healthcare market in the world, or are you actually going to do something also in Southeast Asia, for example, right? So we look for signs everywhere, right, within the three different buckets. And it just won't make it through if impact is actually not an objective that the founders actually care about.
So speaking of impact, do you have a specific way to measure impact?
Yeah, that's right. We do. So we have a impact policy internally, which has 5 different categories and 17 different subsectors within them. And we measure, so we work with our portfolio companies to actually measure the impact. And we collect the data. So the 5 different categories, I mean, I'm not going to go into the specifics, but they cover everywhere from the users, so the patients, and even within the patients, there are granularities. So for example, even within advanced markets, do you have, for example, underrepresented or underprivileged populations that you're trying to target? Right. And then, of course, in emerging markets, then that's actually much more straightforward. But we are aware that, in some of the, poorest countries, actually hospitals are actually for the rich people and not for the poor people. So there are granularities, right? Even just within how many lives, lots of thinking, detailed thinking behind that. And then we also go into clinical outcome, patient outcome, cost savings, and also overall engagement, with the users and what kind of values we can actually bring to the users or the patients. So a lot of detailed thinking there.
Amazing. Very interesting. Yeah, because I found a lot of impact entrepreneurs, one of the things that struggle is how can they quantify or measure the impact? And
Yeah,
how can they articulate properly to other people as well? So that's another
yeah.
thing I just need to learn. So I want to ask, like, what are the do's and don'ts that founders need to be aware of when they raise capital?
Okay. So raising capital is very difficult. And in my view, I always tell people, um, don't when you reach out to people, right? So put yourself in the shoes of VC funds. So for us, we get something like over 2,000 incoming, right, opportunities a year. And so we look at every opportunity. I know that there are, funds that kind of like only prioritize certain introductions and kind of, deprioritize, cold calls or things like that. So whatever the approach is, all VCs have a lot to handle, right, on their plate. So how can you actually catch the investors' attention? So always try to get warm intros, right? Um, in my LinkedIn, I think I have something like almost probably close to 300 connections, which I haven't replied to because I'm very slow there. But imagine if you can get a warm intro, right? And try really hard to get a warm intro, because when you're introduced by the right person, the investors are more likely going to take a call. And when they take a call, that means you are already, at a significantly higher chance of success. Right. Or if not, then you are just one of the 2,000. So think about how to get the intro. The second thing that I would say is, do keep on working on your presentation materials, right? Do pivot, do think about how do you iterate, right? Even for our own presentation for the fund, I think we're on the version, I want to say 52, right? I could be wrong. But look, every time, right? You keep on thinking about the kind of questions that people ask. And are there common questions that you now pick up, right? Because if you have 5 calls and the 3 of them ask the same question, think about, how do I make it clear in the presentation, or how do I actually even just put that on the slide so that I address it right there, right? So people are not confused. Or you just say, I know that a lot of people are concerned about this, so I'll just address it head on, right? And I'll bring it up even on the page and say, I know that this part is very difficult, and we fully acknowledge this, right? And this is how we're doing, this is what we're doing, and then you show that, right? So you almost like you welcome that, and you bring it on. But this is just one example, right? Of when I say you keep on iterating and iterating, because the documents is very often the first thing that people see. Very often, right? Because you don't know these people, and the investors will typically ask to see the deck before they take a call. Right. So you want to make sure that you have a very good deck, and your deck actually says what you do. Because there are many times when I talk to people and when I look at their deck and I realize actually what you say is different from what you put into the presentation. And it's a clear disconnect. And this happens very often. It happens more often than you think. Yeah, especially for early stage companies. So I think that, keep on working on and get others to review your deck, get others to actually say, okay, let me just read it, show it to somebody who has nothing, who has no knowledge about what you do, and just say like, what do you think? Is it clear? Is it not? Right? Does it actually bring you to does it make you curious to actually want to have a conversation, right? What's the weakness and what's so because when you've been staring at something for so long, very often you don't think anymore. It's because it's so familiar to you that you don't actually pick up on what am I missing, right, from the presentations. So the second thing is I think, do the hard work, right, on the presentations and incorporate people's good questions because there are bad questions as well. But as you have more conversations, look for the commonalities. Um, the last thing that I would say is, just don't give up. It's really it's this is really, really hard. And sometimes people are like, we had a nice conversation and then there's nothing after that, right? They said that they would get back to me. But imagine the investors are now back to their, 2000 incoming deals and live deals, and then they're fundraising and they're taking care of their investors and they're running around and traveling. They might have all the right intentions, right? But if you don't follow up, if you're waiting for them to follow up, chances are it's not going to happen, right? And even if you follow up, follow up once, okay, and maybe you still don't get a reply, right? So try again, right? Try again. And even if they say no, because think about a growth mindset, think about a growth kind of state where things keep on changing, right? A no now doesn't mean a no a year from now.
Mm.
It doesn't mean that, right? So keep them updated because you'll keep on having, new developments. So you keep on updating them. You put them on a newsletter, for example, and you keep on telling them, this is the new development, this is new development. And some of them will now say, hey, it looks like you've made pretty good progress. So therefore, I'm happy to look at you more, right? So a no could actually turn into a yes later. So just, don't give up. It's hard. It's supposed to be hard.
Oh, that's so good. Terrific advice. I want to go to the next question is we all know like women founders comparatively receive less capital compared to their male counterparts. So my approach is always, I don't want to drew on a problem or complaining about what's happening, but I think it's good to know the solutions, right? So what we can do better. So my questions to you is, what improvement do you think what we could do to change this dynamic or get more attention from the investor or even get more capital?
Yeah. So I'm the same way as you, Irene. I think that there's no use to dwell on the problem. If there's a problem, then there's a problem. So you just move on, right? I see people who complain about, oh my God, why is this so unfair? And I was like, hey, the world is unfair. At least you were born here. At least you're here now, right? Instead of somewhere else where or there are people dying in different regions of the world, all due to the wrong reasons, right? So the world is unfair to start with. So it is what it is. So I would say that this particular female problem has been around for a long time, and whether it's going to improve, whether it's we see improvements, but how quickly it's improving is really in nobody's control, right? It's the industry. So, so from the founder's perspective, yes, things are hard, but it doesn't mean that you cannot raise, right? So, and people tend to say, oh, it's only 2% that goes to, female founders. But I tell people the 2% is actually very misleading. It's 2% that goes to all female founders. Yeah. So, and if you, take a step back and just look at what about teams with females? That number is way higher. Yeah, way higher. I don't know the latest, but from the internal data that we track, it's more than 30% because we also track that, within our own database. So within 30+%, actually, I would say that, chances are okay. It's not like, this is a showstopper right there. It's not. Yeah. So it's more about how can you do the right things to get in front of people? How can you do things so that you really, really excel?
Yes.
right? You show that, where are females strong on and men are relatively weaker on. And it could actually be things like, for example, women tend to really listen to feedback, right? And they tend to kind of like they ask questions and then they iterate and they say, okay, given that, here's what I can do, right? Because, some of the men are kind of like, I'll just do this. And they keep on pitching the same thing and they wonder why it doesn't go anywhere. Or they have the wrong deck and they have, kind of like a deck that doesn't say what they do. So, use your own strengths, right? Use your own strengths and do that really, really well. And just keep in mind that you will need to work harder. That's just reality, right? But if you've chosen this, then you work harder, because this is your choice, then don't complain in a way. So now from the investor's perspective, it's actually more about how do we give females more opportunities for them to present, right? How can we coach them? How can we help them? So it really comes down to simple things. Like, for example, take a meeting, right? Here's a female founder, you take a meeting. And I think that it's that kind of simple things that investors can do, and not just limited to female investors, all investors can do, right? To help just elevate the chance of success for females. And I think that overall, look, this is a industry. This is really more of an industry phenomenon. So there's nothing that individuals, particularly individuals, can do to really move the needle, right? I think that we should all try, but this is going to come down to so many other people to really make it work. So I'm just being very pragmatic here to say, look, the problems are there, fully acknowledged. So let's work harder so that we can overcome the difficulties.
Yeah, I agree. I think opportunities is everything. You just have to give them opportunity and give them the confidence. So yeah,
Yes.
try hard
Yes.
and just take the leap. Let's talk about the future. So what's
Mm.
current future trend in innovation that catching your attention?
Um, I, well, number one, I'm biased. So obviously health tech, I think that there's a tremendous amount of potential, right, within health tech. Um, I take a step back and I will also say that when I take a very long-term view, right, on the human evolution and what's actually important and essential. So number one, I would say that we got to take care of Mother Earth. So everything that has to do with the environment, because if we don't have, if the Earth is not healthy, then nobody can survive.
Mm.
Right. So that's actually that's what I think is the foundation for the humankind to really move forward. And then the second part that I would say is really as long as there's humans, then there's human health, right? As long as there's humans, we take care. We are going to need healthcare. So healthcare is the kind of thing. It's sort of like water. It's just absolutely necessary. So I think that within healthcare, healthcare will always play a role. And more specifically, I think that health tech, right, is really the emerging sector within healthcare. And health tech has had its own growing pains as a new sector. And it's very similar to actually the dot-com, where it went up, there was a bust, and then it came down. But then what followed the dot-com boom and bust was actually 2 decades of golden period for the internet. That was the best period for internet investing. And what follows for health tech actually is something that's really quite similar. So we are in that golden period right now. So we're quite excited. And then the third area that I'm personally very excited about is really AI. So AI, I think that the next decade or 2 decades, we're going to see AI, make its way in some of the very fundamental industries and change the way that we do things. So lots of potential in AI.
Mm, amazing. Well, before we conclude, it's time for our quick lift. So every
Hmm.
episode we have a quick lift sections, which is a short answer, and
Okay.
Yeah, and hopefully the answer could spark some inspirations and motivations to the audience who's listening, and some rapid fire questions. So are you ready?
Sure.
Sure. So the first one is, what's the one piece of advice you would give to your younger self?
Be disciplined. Yeah. Self-discipline is everything.
Mm,
Self-discipline is one of the biggest success factors.
love it. Can you share a book, podcast, or resources that has significantly influenced your entrepreneurial mindset?
Yeah, I think I really enjoy reading. I think books are great. So a few of the books that come to mind are so there's a recent book, Super Founders. Super Founders actually goes into what kind of characteristics these super founders have. Another book is 0 to 1. It's a classic for founders. And then if you go into like really, really classics, like B school classics, one of my favorite from a very long time ago is Crossing the Chasm. So this is really talking about adoption, right? New technology adoption. And I think that, even though times have changed, you can still borrow a lot and learn a lot from, the kind of the principles, that talked about in that book.
Love it. The next one is, what's your one failed forward moment that has set you up for future success?
I've had so many. You know, how, how do you not fail? If you're not failing, you're not trying hard enough, right?
Exactly, right?
But
Yeah.
yeah, so I feel like every like look, we all fail. Yeah. So turn every failure into something better. Yeah, that's literally what I think about. So
Yeah, yeah. So
so
that's always a question. Yeah.
yeah, yeah. One one you know so yeah, there are just so many that like yeah. So even okay, I'll tell you something. Even in personal life, it's absolutely okay to fail and also move on. Yeah.
Mm,
So I myself, so I had a failed should I call it? I had so in my personal life, I was actually there was one time that I was supposed to I was going to get married, and then I ended up not getting married. And then in the end, now my husband is awesome. So I have actually somebody who is so much better. So it's yeah, I would say that that was probably one of the biggest fail forward
oh,
moments for me.
I love it. I love it. Just the reality is a lot of people afraid of failure. So there's a
Yeah.
fear of fail, but as an entrepreneur, as you said, you fail every day, every single day. Yeah,
Yeah, yeah,
yeah.
yeah.
I love it. So the next one is, so what motivates you every day?
Passion, just doing what I like.
Mm,
Yeah.
love it. My last one is, you must be super busy every single day. So how do you prioritize self-care and maintain a good, healthy work-life balance?
I don't think I'm the right person to answer this. I don't think I do it very well. I fail at this actually pretty often. But I do try. So do put things in your calendar, things that you care about. So now within my calendar, so Saturday morning, I have my personal training session. And then on Monday and Wednesday, I also have a 1 hour block, right, in my calendar where I say, I prioritize this. So you make it, you put that into your calendar so that it's there. Because for me, if it's not in my calendar, even if it's in my calendar, it still might not get done, right? So then you put it in. Yeah. So just try. Just try really, really hard.
So true. Well, thank you so much, Scarlett, for sharing your remarkable journey and insight with us today. It was just next level. I love it. So to our audience, your dedications to driving positive change in healthcare and, making health care accessible for everyone, it's really, really remarkable. So So thank you so much for your time today. And let's stay tuned for our next episode of Live Talk, where we continue to explore transformational stories and empower each other to reach new heights. And remember, together we can create a world where every woman and everyone can thrive. So until next time, keep lifting each other up. So thank you so much for your time, Scarlett, and thanks for all of you who listening to this episode and tuning in. I hope you find joy.
Thank you for having me.
Thank you. I'll just